What is up, Big Cash crew? It's Richie back again on a Wednesday for a nice wee market review. I'm only going to get into three currencies today, which is the primaries. So we've got Ripple, Ethereum, and Bitcoin. Let's get started. So guys, what I want to do is I want to point out a couple of things. I want to leave you to do the analysis. Okay, so I'm going to blow up every single 4-hour chart on the three pairs, and I'm going to blow it up to like current, and we're going to go and have a look at it and see what analysis you'll come up with. Right, so I'm staring at we're all staring at the Bitcoin. Let me just hide all these drawings so we don't get, turn my trading sessions off, so we don't get confused. Right now, we're looking at Bitcoin. As you can see, we've got this move, a retrace, a pullback, and a retrace, and now we're pulling back. Today's been a bullish day. We've gone up, we've had a bearish candle, then we've gone back up, and we probably will proceed up in a bullish trend on Bitcoin. On Ethereum, we've come down, we've gone back up, we've come back down, we've had a bullish day, we've had a bearish candle, and we've pushed back up into a bullish candle, and highly likely that we're going to finish in a bullish day. It's quite odd, right? Ripple, we've come down, we've gone back up, we've pulled back, we've gone up, we've had a bear candle followed by a bullish candle, and we'll probably end up in a bullish day. Now, if you can't spot something wrong here, then you're probably crazier than I am right now, and I'm pretty crazy. All right, the simple fact is that not one currency pair in the history of financial currencies has ever been in sync like these three are. Now, what does that lead you to think? Is this a natural movement, or is this a man-made move? We'll show you it again. I'm going to pull it out. That's that Ethereum move, exactly the same. That is the Bitcoin move. It's exactly the same. Back to the Ripple. Same again. This is not natural behavior of any currency, any financial asset at all. And just to prove my point, all of these assets that I've just shown you into USD. All right, so let's flick over here. We'll go to the Euro USD 4-hour. We'll go to the cable, which is the pound USD. We'll go to the Aussie, which is the AUD USD. This just doesn't happen. There's a hand at play here, guys. We've got a nice double top on the cable. Price pulls back. That's what it usually does. Price has gone bearish straight after a double top. The euro is in an upward trend against the USD. The AUD has just finished the cycle and we're pulling down. So when you see that image that everyone's seen where you've got jubilation, you're making money, you're on top of the world, and then it starts going over the crest and you start worrying and you start getting into depression, we're actually going into that cycle right now with the Aussie. So what I'm trying to say is all of these currencies, all 6 of them are backed into the USD. Okay, so in the first 3 that I've showed you, which are the cryptocurrencies, they are all identical. This is not behavior of any asset. As you know, Wall Street wanted in. We've had the news yesterday regarding the regulation in the USD. We've had bad news come out of China saying that China have absolutely vetoed cryptocurrencies. They've putting on their firewall all the ICOs, all the exchanges, so that their residents can't trade them. So that's a huge negative amount of news come out. We've had the Lloyds Bank in the UK stop their customers from purchasing cryptocurrency. There's been a whole bunch of negative news come out. New Zealand have just come out today saying that they are stopping Cryptopia. They're closing Cryptopia's bank account. So if we think back into just before Christmas, this was a scenario where all the media we're hearing about cryptocurrency was, it's a waste of time, it's a waste of money, it's never going to take any gravity, you're throwing your money away, you're doing this, you're doing that. It was a completely different spin being put onto things. Now, a month or two later, we have banks trying to shut this game down. And the simple reason is it's making too much of an impact. The gravity of it is just so extensive with the amount of attention that it's getting that it's becoming a problem for the central banking systems. That's exactly why cryptocurrencies was put into this space, to take the power out of the government, to take the money out of the war, to take, all of the above. There's so many different levels, and there's a couple of different arguments to say, it's a Robin Hood style mentality, you know what I mean? Like, at the moment, we're stuck in a system. We've been stuck in a system for so long. Like, I trade Forex daily, and I know that market's rigged. I know that I'll enter a trade, price will go up, it'll stop out everyone going long, and then it'll pull down, stop out everyone going short, and then it'll continue on and do its move. So it basically gets you stopped out at both sides of the market, and then it will move on and do what it wants to do. Now, very, very few traders have a long going and a short ready to go, ready to enter. It's just not a usual practice. And 95% of the times, the only time that you lose money on a trade is because you get stopped out. Your stop's either too tight, it's in the wrong place, or the market's moving against you, and then it goes on its direction. That's what they call the 90-90-90, which is 90% of retail traders lose 90% of their money within the first 90 days. It's pretty easy. If that's the odds, then there's a hand in play there as well. But bringing this all back to these markets today and over the last couple of days, this is not how markets work. This is just ridiculous. Like, let me just take off all of these drawings so there is nothing there. This is just absolutely absurd. Now, there's a couple of train of thoughts, and I've got our trading group have been going over a number of different topics over the last probably month or so, because we've watched these currencies sinking up quite a lot, and more specifically when the sell-off is happening. So when the full cycle hits, all these currencies are going into the same trend, which means that the button is being pushed on all the majors, all the primaries. There's, 25%, 25,000 people that own 25,000 and above of Bitcoin. There's about 1,000 of them. And, they, of course, the big players in Bitcoin if you are one of those big players. So you'd have a relationship with several of these people. And that's where the term whale comes from, because people believe that the whales are, throwing, 25,000 Bitcoin on an exchange and then selling. That's true. But there's no names to these people. Obviously, Roger Ver would be one of them, because he did have one of the largest vested interests in Bitcoin. But nevertheless, I come back to the thing that I always say, and you can't trust the market. You've got to work with the system, and that's exactly how we trade. I'm going to bring you back to Ethereum. All right, so Ethereum is still. Let me turn my drawings back on. Ethereum is still in an uptrend. Okay, we need price to get down below where my cursor is now, which is about $287, for it to be in a downward trend. Okay, that's pretty much not going to happen. We have seen the railroad coming off the bottom here into the management zone. We've pushed up. There was a management zone just right here, which I just tweaked, and if I pull that across, as you can see by these candles over here, it did meet that criteria. It met the criteria here. It also hit it here twice. And of course, the top of this move right now, where we're sort of staggering around that 780 mark. Okay, the next point of interest would be where I just had this management zone, and let me just get that correct, is right here. So we've got points of interest around here. We've got tests. We also have a few tests here. And then if we do see price push up, we're going to see another test up and around this point here. Okay, so that's going to be a first high if that's achieved right now. Okay, so potentially if all goes well, price pushes up, we're going to be watching this zone here because we've had a bit of a look ski. Obviously, you've got the bottoms here, this point here. We will be hopefully pushing through there with a bit of momentum and potentially up to this zone. Now, if we do get up to that zone, then we do want to be seeing a pullback to potentially down here and then around where these points of interest are here. And then we will see a potential move to the upside, okay? And anywhere from here and all the way up and above. Okay, now that's in the grand scheme of things. However, going on technical analysis and about a decade in these markets and watching what's playing out in front of my eyes here, this is not a naturally occurring sequence. I've never seen this before in my life. Not with three currencies all presenting the same candles all at the same time. Presumably, the powers to be do not want to buy in, and they want to get into this market. They don't want to buy in at an overbought position. And what they deem overbought is clearly not what we deem as overbought. So we've got to keep that in mind as we're trading. Right? We've got to work with the system, not trade against it. So when we're thinking about that, we're thinking about the central banking, the exchanges, the major exchanges. They're wanting to enter in a point, so when we get back up and above, around about the time that it just pulled back around, for Ethereum it was about 1380, around that point, that's where they're deeming the market to be overbought. So you might see like a 20% increase, a big retrace back down. The big retrace back down where they sell out, they'll wait for it to come down because it'll create a panic, especially after this last one. And then you'll see a re-enter and we'll move back up. Now, I did say this earlier on in our series that crypto is going to start reacting like every other asset, and it's doing exactly that. Apart from what's happening right now, and that's just scare tactics. There's nothing else going on there. Blatant scare tactics. Everyone's freaking out. So you've got all these people that are saying they're holding, but they're selling out. I've had friends sell out. A whole bunch of them. I'm laughing like this is not what you do. You know, if you want to hold a position, that's entirely up to you. Don't expect an outcome for long term, 5 to 10 years. If you're going to trade, you're going to see an outcome much sooner because you're not worried about these retraces. You're worried about if you're able to buy back in, like at these points, and catch the move back up. You're in an upward trend, you're trading upwards. When you're in a downward trend, you want to be trading downwards. It's as simple as that. I'm going to go back over this because I don't believe too much is going to happen this week. So this is part A of the general market analysis of what and why we trade and what's actually happening right now. Part B will be in 2 days on Friday. But until then, I'm going to leave you with that thought, and I want you to comment and let me know what you think is going on and why these three are synced up as they are. Ciao.